Very good evening, everyone. Welcome to Admiral Markets. My name is Chris. Nenad, of course, is with us as well, and both of us we're going to take a look and review this topic, understanding the flow of price and what it is communicating to us traders. So we're going to be focusing on price action, in other words. So before we dive into today's topic, be aware that we have these disclaimers. First of all, the fact that the webinar is shown to a global audience but may not be suitable for everyone. Take a look at this link, admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity to find out more about that and other details. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you're also aware of the risk involved when trading. Alrighty, so thank you for that attention. So today we're going to talk about candles. Looking forward to that. We're going to be talking about price action and what it means. Good evening, Ivara. Hi, Maria. Good to see everyone here. So first of all, the candle direction. That's of course quite logical. What kind of information is that showing to us? Whether it's bullish, bearish, or is there perhaps less information if it's a doji, if the close and the open are nearer to each other? It's an indecision, in fact, so that would not give us much information. Sometimes it could actually. Sometimes a doji might give us information as an indecision. If there is a strong push up and we see a doji, that could be actually a reversal signal. In other cases, if they are occurring in corrections like this or in sideways movements like this, or they're occurring even in halfway the momentum, then they're a neutral slash indecisive candle. They are not really conveying information that is really changing the picture or adding anything to our analysis. So from that point of view, they are less valuable. But there are some dojis, there are some indecision candles that actually show a potential for a turn of events. Bullish and bearish candles typically are valuable, right? If we see, for instance, here, there's a clear bullish candle, and we can see automatically just from looking at that candle that this candle is conveying a lot of information. The fact that it's bullish probably means a lot for our analysis because it's clearly a dominant candle. And why it's dominant, I'll explain in the next slides. If we look at some bearish examples, we can see that this is a clear, a clear indication of a downside. That's a strong candle. But if we look at some other bearish candles, for instance, they might not be as important, right? We can see that this candle here, a small candle, this is a small candle. They're bearish. Here is a small bullish candle. Here's a small bullish candle. So these candles are all bearish and bullish, but yet they don't really convey a lot of strength. They don't convey a lot of importance because of their size. One of the things is their size, and maybe their close in relationship to the high or low. So the direction of the candle is not everything. It's the first basic step we want to look at. What information do we get from it? But we want to look further than that, because if we only look at this, we might be overemphasizing a small bullish candle or a small bearish candle, and that's not good either. So yes, that's the first step, but certainly not everything. The next thing we want to look at is the size of the candle. When I'm talking about size, it really depends on time frames. You want to basically just make a relative comparison of comparing the recent candle to past candles. And is that relatively a bigger candle, or is it relatively a medium or a smaller candle? And that really depends on time frames. If we're looking at a weekly candle, then while a 50 pip candle is very, very small. If we're looking at a 5-minute candle, well, then a 50 pip move is big, is gigantic in some pairs, right? All depends. Not only on the time frame, but currency pair too, because if we're looking at a pound yen, boy oh boy, those things move fast, right? If we're looking at the Aussie, a lot less volatility, a lot less movement. So 15 pip candle on a 50-minute chart is small with the pound yen, but might be normal on the Aussie. And that really all depends from currency pair. So that's something that is difficult to quantify and put in a sheet like this and show to you. It's better just to make the relative comparison. The size of the candle matters, first of all. Let me explain why it matters. Because if it's a relatively bigger candle, it shows a lot more importance than if it's a small candle. A small candle means there was no movement throughout that time frame. If we're looking at a 4-hour chart, that means really nothing substantial happened in those 4 hours. So whether it's a small bullish or bearish candle or doji, it really probably will not give us much information. Whereas if it's a medium or stronger or bigger candle, I should say, sorry, then a lot of things happen, a lot of price action happened in that candle. So the information is more valuable. That candle itself is more valuable. So when we look at these candles in this screenshot down below, then we can see that this was a very decent sized bullish candle. That definitely gives us a good information that in the near future there could be more bullish momentum to be expected. Here again, a strong bullish candle, right? And here too, strong bullish candle, good size. These candles do not matter that much. They're small. Whether they're bullish, bearish, indecisive, less important. Same here. All right. And we can see also these candles, very strong. So those are candles that when they end up bullish like that, there's a high chance indeed of continuation. And we can see that indeed price kept on pushing higher. Now there's another thing to look at. Not only basically does the size matter, but also, first of all, the size is important because a strong candle is a master candle, as Nenad calls it, basically. And Nenad will, I'm sure, dive into more of those details as well later in this part. But basically, there's just a strong candle will have the following. First, before I dive into the close of the candle, let me just say the importance of why a big candle is important. Basically, as I said, you got a continuation of that candle likelihood. So what that means is if there's a strong candle, the chances of that direction continuing in the next couple of candles, like 5 candles, is high. So if you got a strong, big bullish candle, the likelihood of an upside continuation in the next 5-6 candles within those 5 to 6 is very high. That means that the break of that high or low, depending if it's a bullish candle, a break of the high is very likely. A retracement could be seen as an opportunity, a retracement of that candle. And basically the opposite, if it's a bullish candle, the opposite, so the low, is not often broken. And if it's a strong, big bearish candle, the high is not often broken. All right, so these are kind of consequences. And we'll dive into how this info can be used for trading later on. So we looked at 2 things so far. We looked at the candle direction. We looked at the size of the candle and why is it important. Next thing I want to talk about is the close in relationship to the high and low. That's important because if it's very far from the high or low, we have what's called a wick. You've probably heard of it. And wicks give us information about a sell-off or a bounce, and that could provide information about a reversal, a turn in direction. So wicks, not all of them, I think, are important. I think that the higher the time frame, the more likely it will be important. A weekly candle with a major wick is going to have probably a very high importance, a very big impact on the market. Whereas, a wick on a 5-minute chart could have a bit of impact, but it's obviously not going to have that long-lasting major impact as a weekly candle. So the lower time frame we go, if we go from monthly, very important, down to daily, still the same. Even 4-hour, 1-hour chart, I think still has good wicks, has good info on that. But I like to see a bit more confluence. I would like to see maybe a wick that is at a fib, maybe at a pivot point or support or resistance level, anything that could support that wick. There's an extra reason that wick is there. Because wicks that just appear basically in the middle, let's say in the middle of a playing field, without any clear, strong support or resistance level nearby, I've seen many that have not much importance. All right, so that's just my experience. In general, there are some rules though that make wicks more important or less important. A wick on a big size candle, actually, so if the candle itself is relatively large and there's a sizable wick on a large candle, that has more importance. You know, a small candle, like this, for instance, it does have a big wick, relatively, but the candle itself is small. So that's not going to have a major impact on, I think, on the price movement that will occur after that. But if there's a big candle, for instance, this one, all right, that is definitely a bigger candle than this one where I was looking at first, right? That candle actually with the green circle is a decent sized candle for an hourly chart. That was London Open, I think, on Tuesday. And actually in the live webinar I said, if you see a pin bar on the 4-hour chart, this is the 1-hour chart, so that's a bit different time frame, but we had the same pin bar on the 4-hour chart actually, maybe obviously a bit bigger, that could be a good reason to go long, I was saying in the live webinar on Tuesday. And it was, that worked out fine. Anyone who might have joined me in that trade did perfectly well because we got a lot of upside, and I guess today we got a bit more upside, but it was a bit choppier. So anyhow, that worked out very nicely on Tuesday. And that all had to do with, first of all, the fact that there was a pretty decent sized candle. Second of all, the wick itself is a decent percentage of the candle. And how I measure that, it's simply just measuring the candle itself. So high minus low, and you get the size of that candle. Let's say that this candle is 50 pips. Then I measure the distance between close and the low in this case, right? With the bearish candle, with an opposite, a downward candle, I would, with a wick on top, I would be looking for the opposite, of course, close minus high. So in this case, it looks like it was about, well, I think 40 pips probably. So we have a 50 pip candle and a 40 pip wick right here at the bottom. All right. So as a general rule, anything that's more than 70% wick, and in this case, if we do our math, it's about 80%, isn't it? Right? 80% of that candle is wick. If it's more than 70, that's a lot of wick, is my rule of thumb. If it's less than 50%, then it could still be a reason to take profit, but otherwise maybe not so important. It's for entries, I would say, a bit less relevant. It could still be maybe worth it to take profit, especially if you see a wick that is 50% or 40% of the candle at a strong support or resistance zone, right? The wick is not that large, but if there's other factors that come into play, or if it's a high time frame, it might make sense to still take profit. But it would not be a clue, I think, to enter a trade, because that would maybe not be substantial enough, not important enough to base a trade on that alone. I would wait for an extra candle and see if that's a bearish candle, for instance, in an uptrend that could be worth a reversal. But I would need a candlestick pattern, basically, in other words. If the candle has more than 70% wick, then it's definitely something to take profit and get out of any trade, because a reversal might be coming soon, right? And it could be worth a reversal trade just based on that wick. If it's a 4-hour daily chart or higher. On a lower time frame, I'm not sure. I would advise, I've never taken reversal trades on less than 4-hour chart based on wick, so I don't know. So be cautious with that. Um, all right, so but sometimes 1 hour chart though. But those were kind of reversals within trends, so it gets a bit complicated. Anyhow, so 70% very important. If it's between 50 and 70, I guess it really depends a bit. It's a gray zone, and it depends on, I guess, other confluences as well. The other thing I look at is the candle close compared to the candle close of the previous candle. So for instance, here we have this wick, right? And we see that candle close of the pin bar is in basically above the close of the previous candle. That's a nice little extra confirmation that the close is above the previous close, indicating, I think, a higher chance of a potential reversal. Now, if this pin bar the close would be a bit lower, would be down here, for instance, would it therefore invalidate the trade? Not necessarily, in my opinion, but I think it is less strong, especially if it's bearish. Okay, you still have maybe 50% wick, but the close is not above the previous close, and the candle still ended up bearish. So I know these are small little things, but I weigh these three factors and then decide how to interpret the value of that candle. In this case, it was clear. It was basically a perfect pin bar in a way, right? Because we had substantial wick, we had a candle close above the previous close, and it was bullish. So it really fulfilled all those three things. And if it does that, great. It's more important. If it doesn't, then it's getting into a gray zone, right? And then it depends. Could still be good for exits. Whether it's good for entries really depends on confluence. If we have something that is a relatively small candle and there's a small wick on that small candle, that wick is not important. All right. So when analyzing candles, I focus on these three things. I look at candle size, I look at wick, and I look at candle direction. That gives me the candle information, basically, that I'm looking for. I can then take 2-3 candles and start looking for candlestick patterns as well. That would be the next step. Because all of these three things that I just mentioned is looking just purely at one candle, only that candle. But obviously, we can then start to take the analysis to a higher level and start to be comparing multiple candles. And we know that if there are certain sequences of multiple candles, 2, 3, 4 candles, that these could be then combined to make and look for candlestick patterns, right? Now, I'm not going to dive into those patterns. That's a different topic, different webinars we had in the past already. And maybe we can do that again. It was a long time ago, actually. So I don't know if anyone's interested, let me know. But that would be then the next step. And those patterns, of course, give information about continuation, reversal, indecision. So if we look at what is this? It's a 5-minute chart. So it's maybe not the best example. I didn't realize it was a 5-minute chart. But okay, for argument's sake, let me just make this weekly. Let's say it's weekly, right? Or let's make it 4-hour, right? I don't want to encourage 5-minute interpretations here, but you can see kind of a pin bar here, right? And we see a strong, decisive 5-minute candle breaking a trend line. Now that was actually my reason for taking that trade there, or one of the reasons at least. Where you can see an entry right there. It was a sizable candle. This one right here. It was a sizable candle. It had a close near the low, and it was bearish. Clearly breaking also below the candle wicks here, plus clearly below the close of the previous candle. So for me, that was a good breakout as well, and we got to follow through. But if you look at patterns, although I said once again not a good time frame to look at it, but we could see engulfing twins here, roughly speaking. We can see what else? A pin bar, that could be a warning sign for reversal, things like that are then visible with patterns. The next step after looking at candles would be to look at sequences of candles. So we take the analysis of one candle, or yeah, one candle basically, and we increase that to a couple, and we see candlestick patterns. But then we can go even a step further than that and start to look at basically a whole series of candles. And if we see that there's a whole bunch of them that is going into one direction, like for instance here, we see already a couple of them going to the upside there in the green circle, then we might have actually what's called momentum. That's a series, a couple of bullish candles. I like to see, for instance, my rule of thumb is 3 of them in a row or 3 within 6 candles. And those candles, to qualify as momentum, I would like to see, first of all, 3, as I just said, 3 out of 6, right? Or 3 in a row, preferably, but 3 out of 6 as minimum. But, to qualify as momentum, we need to see some things. We need to see at least 1, preferably 2 candles that are relatively larger. We want to see those candle closes also relatively near the high or low. Then it qualifies as the start of momentum. And often we will then see a follow through. So for instance, these 3 candles could already have qualified as the start of momentum. And indeed, we see a whole series of candles to the upside. Now, not all of these are necessarily strong. As you can see, not all are very big candles. You got some smaller bullish candles, but that's okay as long as most of these candles, 70% or more preferably, are bullish. And that certainly is so in this case. As long as there are a couple that are relatively large, like this one, and this one clearly, and this one, and maybe even a couple of medium candles like here, then that's fine. And we can also see, thirdly, that in that series to the upside, most of the candle closes are near the high. So this definitely qualifies as bullish momentum. All right? And it all started in my definition here. And then it continued to, of course, this big pin bar. And you can see that pin bar is significant. Just by the way, as a side note, that pin bar is a pretty strong signal. And there are a couple of things we just mentioned why, right? First of all, and maybe I can ask you, actually, if you want to chime in and join me, what are the reasons that this pin bar is actually a strong clue that momentum to the upside could be very close to being over, as it turned out to be in retrospect, falling down. What are the clues? Does anyone remember that were just mentioned? Great. Maria has the first one. Wick is indeed over 70%. Very clear, no doubt about it. I mean, we're talking, who knows? This is maybe close to, it's definitely 80%, maybe even 90%, right? So, huge wick. Doug, great length. Obviously, in this case, substantial size, great pin bar. 4-hour chart, good time frame too. Big candle compared to that upside, so definitely. Now, in this case, I would actually not even, because the momentum was so strong, I think that even a smaller, this is a very big candle, but even if the candle would have been something like, to be honest, if it would have been something like that, even like half that candle would have been already probably enough for me, right? But this was more than big. And let's see, we got Tom saying close, indeed, previous candle, close, right? Below the close of the previous candle, so marking a shift there. And Doug adding extra that it's a bearish candle. Perfect. Everyone passed. That's exactly the things that we're looking for. And it qualified all of those, right? Perfectly. So that was a great pin bar indeed because of those things. We got a bit of retracement, about halfway that candle, and then we saw a follow through of that. So great momentum, but great pin bar too. Alrighty, there was something I wanted to add. That don't remember. Doesn't matter. Let's move on. The correction is something different. That's of course when price is moving slower. So how can we define that? It's basically the opposite of momentum, but basically there are smaller candles, there are a mixture of candles, and the closes tend to be not as strong, not as near highs or lows. Sometimes, yes, they do end near highs or lows, but it's more at random, not as repetitive, less of a pattern. So from that point of view, we can see very clearly that this right here, this is your dollar weekly chart, a lot of basically mixture, right? Some bull, some bear, relatively smaller candles. Well, some of them are actually pretty sizable, but you're going to have quite a number. Usually, you see quite a decent number of smaller candles too, and the closes are all on the over the board. So that's a correction. So how can we all tie this together? Well, basically, so I mean, the candle gives us info. Then we can perhaps use candle patterns. We won't have that always, but sometimes they will be present, and we can use that info. And then we can use momentum and correction. By tying these three things together, we get a directional idea. So we get a bias to which side it could be good to trade. So to give you an example, this is the dollar yen weekly chart. So, all right, let's maybe take a look at. It's a bit small probably for you, I know, but let's take a look at this spot right here then. We have the green arrow and the green circle because we had momentum prior to that. All right, now we're seeing a correction because there's a mix of candles going sideways. And at that green circle, it looks to me that there's a roughly an engulfing twin. All right, so that's a candlestick pattern. We already see the momentum and correction. So the momentum is showing that the upside is stronger, right? And the candle info is giving us information, and that's difficult to see. So, but basically the close is near the high. It's a smaller candle, but it's relatively, it's not a big candle. So that's kind of a minus point on that. But it is engulfing twin. It is a close near the high, and it is also, I would say, breaking above the previous candle high as well, right? Which is part of the reason why it's engulfing. So seems to be okay to me. Now the size might be something still to worry about. So, if you then see three candles like that in a row, that would be the confirmation of momentum, in my opinion. And you can see that momentum continue after that. And Ivari indeed mentioned correctly that the correction basically is the chart pattern of a triangle. And corrections will make very often different chart patterns. So chart patterns are indeed triangles, flags, head and shoulders, all these things. Exactly. Great comment. Ivari is also asking if there are three dojis in a row, would it mean reversal? Traded situations like this previously had two false breaks before dojis. What's your opinion? Three dojis in a row, definitely a warning sign. Still trying to figure out your second part here. Let's see, traded situation. You previously had two false breaks before dojis. So I think that you saw a break with a doji and they turned out to be a false breakout, if I understand correctly. And definitely breakouts, I think we need a strong close. I think with breakouts, it's a particular good moment to look at where the close ends. I think that's a very, very effective way of handling that. And sometimes I say in the live webinars, I'm going to look at how this 4-hour candle closes, because that will guide me what I think that the rest of the trading day could do. And there's nothing wrong with waiting for that close and seeing the relationship to the high. I think it's a strong approach. All right, so that's just an example then, right, of using that and getting a direction. Now, when I have a direction, then there's the option, of course, of potentially entering. And there are a couple of ways of doing that. There could be, depending on how one trades, sometimes I use breaks of trend lines, breaks of moving averages, basically candles going through those moving averages. But I could also just trade the candle itself. And what I would then do is, for instance, put a retracement fib on the candle, on that particular candle, and wait for a retracement. This is very good for 4-hour candles, daily candles, weekly candles. An hourly candle, it might be okay too. But you gotta, I would say, I would then look for definitely a sizable candle. Size is then very important in all time frames, but I would say particularly on the hourly. So the retracement here, as you can see, by putting a fib on this candle, and we got a retracement down to the 50 fib and a bounce at that fib. That could be one way. If it's a smaller time frame, an hourly, a 15, maybe even 4-hour, retracement doesn't always occur. So sometimes it could be worth taking the trade right at the close. Now, taking the trade at the close, I think makes more sense in a reversal. Actually, interesting enough, if they're engulfing twins, at least, let me say it this way, it could still be worth waiting for the retracement as well, by the way. It could be worth when the move just started, about a couple of candles, 3 candles. In that case, that might be the best moment, actually, because I might not get the retracement. I do not take the candle close if there's been already a substantial move in one direction. So if there have been a couple of candles like this, and I'm thinking about trading this candle right here, I would want to see a retracement because I've already seen a substantial move down. And I would like to see a bit of retracement on that candle. So it all depends. Well, whether it's good to take a retracement or just take the close. I do both, but it really depends from case to case. Trade management, the last one here, basically, here we see daily chart, dollar CAD, very strong candle. All right. This for me would basically mean if I'm in the trade already, if I'm not in the trade, I would think about, as I already did here, placing the fib on it and looking for a correction and continuation. Sizable candle, closed near the high, and is bullish, clearly breaking resistance as well. So that looks good. But if I'm in that trade already, I see a strong close, I see a strong candle, and I see some sequence already here. So basically, that's a different point. Hang on for that. So I would definitely go with the trail below that candle low. That candle low will probably not be broken, and if it does, it's questionable if I want to stay in that trade. Probably not. All right, so that's one way of trail stopping it. The other would be if there's a sequence of candles. For instance, here you see a couple of candles in a row like that. Even if one of them is not a strong candle, and there are a couple of strong ones, but even if there are a couple of candles in a row like this, right, but only one or none are very strong, if I want to reduce my risk, what I do is actually trail stop the second low, the second candle back. So what that means is if this is the current open candle, all right, let's say it's a doji at the moment, the current open candle, okay, and there were, I don't know, like 6 candles before that, bullish. What I would do is if I want to trail, I want to make sure I don't risk anymore, I would go 2 candles back, so not this one, that's the first one, but 2, and put the trail stop below that candle low. So not the previous one, but the one before that. All right, folks, that's it from my side. Thank you so much. I'm going to pass it over to Ned. If you have any questions, of course, feel free to use the chat. Let's see if I can find Nenad here. I'm going to pass it over to the screen.
Thank you, Chris. Excellent ideas, and that is what I like to hear from Chris. Always great contribution and great things about price action. So I needed to say something for our price action training school. So I will give you some hints into bullish and bearish order blocks, then master candles, then T89, and historical versus now moment perspective, because this is also very important. Now this could be assumed that this is some repetition from our price action training school, but actually this is a good way to repeat some of the previous price action things that you should have learned by now. So if you are not sure still what bullish, bearish order blocks are, master candle, T89, historical versus now moment perspective, this is a good opportunity for me to show you again, because in future classes of price action training school we will do some price action candlestick patterns that I have been studying so far. So I think that those are very new, so I'm not sure that you all know it. And for that opportunity, I saved my material. And for this opportunity, we will go through bullish, bearish order blocks first. I'm not sure how many of you have been familiar with these concepts. And these concepts are basically the sort of finding now moment sellers and now moment buyers. But as always, you can compare it to previous or historical buyers and sellers. Needless to say, it's very important to mention that Forex market price action always repeats itself, more or less. And because of that, Forex trading is just way better than, at least in my opinion, than trading stocks. Or, well, equities are better than stocks still, but Forex it has an advantage, and that is historical versus now moment perspective, compared to equities where you will basically trading most of the time breakouts. Equities are moving much faster than Forex market, and most traders who I know who actually trade equities as a full-time trader, they use breakout methods for trading equities. Whereas in Forex market, you can go with positional trades, with like breakout trades, scalping trades, swing trades, whatever you want. But in equities, it's hard to swing, really, especially during the day, because movements are so huge. And especially if you're working with high contracts, you can, or high lot size, we say on equities with contracts, it can be really bad for your account if you miss it. So the thing is, let's start with bullish and bearish order blocks. So bearish order block is the low of bullish candle prior to the move down, and bullish order block is the high of a bearish candle prior to the move up. And actually, I will open my chart now to show you that on our platform. So this is it. We have Australian dollar bearish order block and an Australian dollar bullish order block. So as I said, bearish order block is, sorry guys, this is a bit, I need to move this chart a bit because I have a text, so maybe you will get confused, but I think it's good now. So this is bullish order block here, and this is bearish order block here, okay? So I will remove this line so you will actually see it much better like this. Okay, now it's okay. Okay, now. So bullish order block and bearish order block. Bearish order block is the low of bullish candle prior to the move down. So if you are facing strong resistance here, you can be able to go counter trend if you notice a pattern and order block. So does any one of you know how this pattern is called? There is a name for this pattern, and let me see, do you know the name of it? Let's check your knowledge, guys. So tell me, what is the name? Okay, Marco is saying bearish engulfer. Well, Marco, very close, but not exactly. Arne engulfing, Doug was the only one who was right. Doug, well done. This is inside bar. Okay, guys, bearish engulfing candle would have had a bigger body than this bullish candle, right? So bearish engulfing would eat this candle, right? But because it's still contained within, this can also be a master candle, guys, but this is a pattern, two candlestick pattern. Yes, it's not a harami bearish, because if it's a harami, it would have two identical highs here. That would be qualified for harami. But we say it's inside bar. So you will hear it many times that it's actually inside bar, that it is, guys. So whenever you see this candlestick pattern, you know that it's strong. Guys, this is 4-hour time frame. When you see an inside bar, that is one of my favorite patterns for reversals. Ivari says, never heard. Well, inside bar is very famous, Ivari. So you should have heard. It's very strange that you haven't heard about inside bar. But let me tell you that it is very, very, very strong pattern. And especially if it's spotted on higher time frames, such as 4-hour or daily. And intraday traders usually look for inside bar on 4-hour and daily. So when you see this pattern, that is a very strong inside bar, now you know that there is a possibility for this here, this low of this bullish candle to be actually bearish order block. How you, yes, it's a decision zone, indeed, Nathan, you're right. But how you actually know that it could be a valid order block? You just need to go to the left, okay? If you can find history, you can go on higher time frame, okay? So very easy to spot it, guys. So we said that bearish order block is the low of bullish candle prior to move down. And here in the history, you see that there was strong selling from this point. Yes, you should look to the left, exactly. And look at this. Selling here, selling here, selling here. And look how strong sellers were at this spot. Look how strong, guys. Again, you drop down to 4-hour, and actually now I lost this, but actually you're able to see it here. Yes, here, order block. So in the past there were sellers. Now you have potential order block because it's close to resistance, and you have inside bar. Now what would you do if the price broke to this support? Nathan gave me the fastest answer. Yes, support became resistance because at this price here, it was retested. Look, breakout, retest, continuation. So there was a breakout here, then it was a retest, and the price continued further down. So indeed, that was a strong reaction out of this pattern, and that reaction spurred another wave of sellers. And that was actually a good thing, because all these sellers who were in early trade here, they got huge profits. So pay attention to it. Another example, okay, yes, bullish order block, guys. This is, look at this candle and look at these candles. Now, as the price goes up here, you see that this is resistance. Because look, this is 4-hour candle. Guys, what did I say when you're looking at master candle? You trade master candles on 1 hour. But you can also watch for important master candles or would-be master candles on higher time frames. And look at this. This is the most important candle here. Because this candle tells you everything. You don't need to have fancy indicators. You don't need to have science, I don't know, PhD. You don't need to be PhD from economics. This is sometimes, this is the only thing you need to have. This candle marks important resistance and important support. Everything is explained here. You can see, okay, here you can see the screen now. Here. Everything is contained within this candle. Look, resistance and support. How big it is? Is it qualified for a potential master candle? Guys, 85 pips of movement. Do you really need some indicator to tell you the interim support and the interim resistance? Forget about all those books about, I don't know, 100-page books about resistance support. When you see this and you trade intraday, be prepared for a breakout. Master candle concept is the next that we will do. So I will get back to this. But now think about this. This is bullish order block. And what is bullish order block? It's the high of a bearish candle prior to move up. So you have a potential bullish order block. You have a master candle. 1, 2, 3, 4 candles. Guys, what did we say about master candles? You need to have a lot of knowledge for this, guys. You need to follow me on price action. You need to know about master candles. 1, 2, 3, 4. 4 candles within this candle qualify this candle to be a master candle. If you still don't know what a master candle is, please refer back to Price Action Training School. Everything is explained there. And yes, you trade it on 1 hour, but you can also, as I said on seminar with Chris and Admiral Markets on at London Forex Expo, it can be also used for higher time frames. Because here in this example, it proves its strength. 1, 2, 3, 4 candles contained, and the second candle broke through it. So this would have been a qualified breakout. Look at this, breakout, guys. So yes, I will change the trading perspective of master candles, so it can be traded also on 4-hour time frame. But mostly we use 1 hour, yes. But also there is a qualifier for this on 4-hour. If you don't want to trade it, at least you know what your support and resistance is here. Look at this, 1, 2, 3, 4, and 5th candle. So it's the first after the 4th, which qualified this candle to be a master candle, broke to resistance, and look what happened. So you have 3 qualifiers. You have bullish order block potential. You have basically an uptrend here. And you have a master candle. Now, having said this, we need to move on to master candle. That is a very important support and resistance candle. And once more, if you're not sure about bullish blocks, order blocks, another proof here. This is historical price action here, guys. Here, look, this is historical price action. This is now moment price action. What did we say about bullish and bearish order blocks? Bearish order block is the high of a bearish candle prior to move up. Okay, so in this case, this was bullish order block. Bearish order block is the low of bullish candle prior to the move down. Yes, this was bullish order block here. Look the reaction. Just watch the reaction at this price here. Look, retest, retest, retest. Every single time price retested this bullish order block here and proceeded up. I call it a breakout. This is not my original term. I haven't invented it. Bullish and bearish order blocks. How I call it usually is breakout retest, because 3 lows of these candles are actually retests of this high here. Watch it here. The high, 1, 2nd, 3rd. 3 retests of this high. All went up. Yeah, this was not a false breakout here, because we cannot say it's false breakout. Look, 60 pips, it's not false. On intraday time frames, 60 pips is good. So depending what you're aiming at, because you're looking at 1 hour, it's not a false breakout. False breakout is if the price goes 5 to 10 pips and then drops. That's called false breakout. But if you have 60 pips after a breakout, that was perfect trade. I need to say a perfect trade. Now, I'm watching ODN price, and I will use my example. You see now ODN is dropping. It went almost to our stop loss, and now it's in a potential profit. And that is when equities are moving the price, but that's another story now. I will make another special webinar to explain you what you definitely need to know about equities and forex market. But look at this. The high of this candle is actually bullish order block and a retest here. And bearish order block is here. Low of bullish candle prior to move down. Did we have in near-term history move down? Yes, we did. Where? At the exactly same price. Here at this level, 0.7613, there was a breakout. Another breakout here, 25 pips. Another breakout here, 44 pips. So you could probably expect in between 20 and 40 pips, because you compare previous sellers to now moment buyers or sellers. So now moment sellers in this case. Here, the move down was good for 44 pips exactly, guys. Look, where did the price stop? At this price. Look, just try to understand the flow of price, how it communicates to you. And this is how the price communicates to you. I know this is maybe a bit of abstract to you. Maybe it's a bit hard for you to understand, to contemplate. But this is price action. This is what I always do before I make you the analysis. This is my homework. That is why my analysis takes approximately 1 to 1.30 minutes, so 1 hour and 30 minutes to make it. Because I need to scan through all these pairs, I need to do all these assessments, and that is why it's accurate. Because understanding the flow of price and its communication to us is of the utmost importance, at least to analysts. Maybe for you, because you're not analysts, is not that important. But if you want to get a deeper insight, you need to know how it communicates to you. Okay, we are short of time. I was a bit long with this. So let's move on to master candle. Okay, now I explain. This is a master candle, guys. This candle here has 70 pips in it, 1 hour time frame. It could have been tradable, 1, 2, 3, 4 candles, and yes, it was tradable. Now, if you took an entry here, it would have been good for 23 pips maximum. Okay, Go to 4-hour time frame, go to daily time frame and watch it. Here, look, previous price, the height. So this is interim resistance here. Price would probably reject here because it rejected in the past. What happened is, actually, we will find it here. It did reject. Look, exactly almost to the pip. So what I did is, for example, if I were to trade it, I opened daily chart because on daily chart it was very clearly seen. Look at this, 3 rejections. What does it mean, guys? Those are historical sellers. If you don't know what historical versus now moment perspective is, please refer to the first lesson in the price action trading school and you will learn it. So 3 rejections, guys, very clear. This is, I really don't need any indicator for this. This is clearly bearish. Now the bullish breakout here went exactly to the first target. Look, this is master candle. 1, 2, 3, 4. 4 candles qualified to be a true master candle. And this was a breakout to the pip, guys. So learn about master candles and use it. Okay. T89, proprietary rejection pattern. Today's analysis, Australian dollar yen. What did I say, guys, on my analysis? Now I will move on and show you. Okay, here. Orient, bearish divergence could bring risk of sentiment to the fore. T89, it is bullish. Look this trend line, very bullish. But look at this. Look at this bearish divergence. Look, huge. And yes, I presumed it could reject from here. And now it's rejecting. Because this level held. I said, if the pair goes above 86.70, bearish outlook will become invalid. It didn't go above. It touched the level here. It touched it. It touched 70, exactly 69.6. Here, it says 69.6. So it even didn't touch 70 to the pip. But of course, if you include the spread, whatever it is. But yes, that is a qualifier. So look at this. Now it's rejecting. But because of this pattern, T89, it went up. Look at this, T89, T89, T89. Look how strong it is. And look the beauty of it. 1, 2, 3. So excellent, excellent rejections in trend direction of T89. So learn to use T89 in your analysis, guys. And finally, Maria is asking, what does T89 means? Maria, if you're new, please, the first class, the first lesson, price action trading school, I explained it there, but just for you, I will be quick. When you place EMA of 89, and when you see pin bar rejection, tail, or tarantula 89, I'm kidding. So if you see this tail rejection, especially on higher time frames such as 4-hour or daily, you can assume that the price will be bullish. Same for bearish T89. Let's find one. Let's find one quick. We really need to find one. Here, bearish T89. Below EMA 89, rejection. The bigger the tail, the better for us. And look what happened. After the price rejected 100 pips to the downside. Remember, ORIEN is correlated to equities. It's best correlated to ASX 200 and during Asia session, DAX during London session, and SP 500 during New York session. It moves along with equities. Bullish equities ORIEN down, bearish equities, bullish equities ORIEN up, bearish equities ORIEN down. So we can say that I can say, in my opinion, ODN is best related to equities. So look at this. This is EMA. Yes, Maria. Exponential moving average. So EMA, look at this. EMA and tails. So pins, look at this. Rejection, T89 down. So that is how the price reacts to EMA 89 and tails. So this pattern is called T89. Look at this example or this example, and you can find it very, very frequently in my daily analysis. Now, from a historical versus now moment perspective, always flip your charts to the left. So, for example, you're about to trade Orient daily. Guys, look at this. One of the reasons I told you to go short on ODN today, look at daily, guys. It's at resistance. It's at double top, triple top. This is another breakout retest. So that is why I said, guys, it could also be bearish price action, because I'm not crazy, even though I would be wrong. And actually ODN went almost to the stop loss. Yes, Arne, you're right. This is W, a sort of W. But Arne, would you really buy when it's on triple top daily resistance? Even though you see daily, even though you see it's bullish, for me, it's too much. I cannot buy on daily resistance, really. Nor I can sell it at daily support. And when I saw that there was actually divergence on 1 hour with all POCs and trend line rejections, I said, what the hell, why wouldn't you try to go short? Now, either way, you can close your trade, you can, I don't know, take 2 or 3 pips of profit. But no, it isn't minimized. Your risk to reward, Nathan, is much better, because let's see. Look at this. This is daily, okay, daily resistance here. So where it should go, look, it could go even to 85.20. Yes, Nathan, maximize. When you take trades like this, your risk to reward is maximized, indeed. Because no matter, you could go long, because obviously if you went long, you would made 40 pips. But no matter what, it would be really hard for me, being a professional trade analyst, to really go long at daily resistance. So yes, our stop loss was maximum 50 pips. If you took the trade from the beginning of POC, it would have been 86.20 or 15. And the top of POC was 86.30. So it's only 45, 50 pips. But assume, guys, this is counter trend trading. This is daily. So if you zoom on to 1 hour, as I did, there has been a potential for 120 pip trade. So it was still good. And you need to think logically. Even though you could have made pips on bullish break, well, very hard for me to actually take trade, because in the near-term history, look, it rejected for 700 pips, guys. In the near-term history, from the same spot we took the short today, it rejected for 800 pips. Well, if historical sellers were aligned, why don't you think that common sellers are also aligned? So think about this and try to understand the flow of price and its communication to you. We are already over the time, guys. We wish you to have the great, and thank you, Nathan. He says, excellent readings. Thank you, Nathan. So I wish you to have a great week. We will be here with you again. And don't forget to follow us and trade with Arma Markets, because we are here to help you. As always, guys, cheers. Cheers, Arne. Cheers, Bob. Lo, Dad, Nathan, and everyone. Robert, Mikhailo, and everyone. Cheers and trade safe.